it feels like now. And I absolutely love the market. I mean, I love trading. I just started doing options at the end of last year. It's using my own one strategy that I do. So the nice thing about my strategy is you can apply it to different methods of trading. So many times people want to do all kinds of different things, and then they end up, going on this barrage of 5, 6, 7, 8 different strategies. And then they never have the real focus, and they never become an expert in just one thing. The good thing about my strategy, which we're going to talk about today, is that you can use it in different methods to take positions in stocks for the market. And when I say the market, I mean an ETF, for example, like the SPY. No, I didn't change the slide yet. I'm here. Let me change it right now. So today I'm going to talk about making $1,000 a day focusing on one strategy. If you have questions, you can email me at melissa@thestockswoosh.com afterwards, or you can email Paul. Many of you may know Paul Lang. He's came on board with me this year. Paul has a lot of numbers of years experience trading the market, and everything's been going great. Paul helps me run the live trading room. I run a live trading room Monday through Friday, and I day trade. So we're going to talk about the strategy that I day trade daily. So what I know, and from my experience, and I figured this out really quickly, even though no one really said this to me, and I wish someone had, is that having a laser sharp focus is critical in trading to become successful. One of the reasons I think people are not successful is because they jump around. They do something for a week or a month or 2 months, and then they quit it, and then they go to another thing, and they go to another thing and another thing. And all of a sudden now they've lost money in the market doing all types of different systems or strategies, paid for 4 or 5 classes, and they don't know how to do any of them. And they're not making money and they're losing. So having a focus is critical. I realized that very quickly at the beginning of my trading career because I was overwhelmed. I mean, there's just so many things out there. And not only that, I was overwhelmed by the amount of stocks that you could choose to trade every day in the market. So if you're new to trading or you really are anxious and want to make money, and I really wanted to make money trading so badly, I really wanted it really badly, which is probably why I made it. But, I got to the point where I realized that I had to just focus. And it was about just doing one trade a day. If you're not focused enough, when you choose what stock to trade each day, it's very easy to lose money. And then all of a sudden you're done 5 trades, and what do you got to show for it? And then the only person that's making money is the broker, okay? So in the same respect, it's very easy to make money if you know what stock to trade and you have a consistent focus. In fact, you can easily make $1,000 a day or even more if you have a consistent focus. Making money trading is achievable with the right system and focus. And you can trade full-time or part-time. It's really up to you. You can do this as a career if you make enough money, and the amount of money that you make could be more than $1,000 a day. It has to do with the amount of share size you take, of the quantity of share size, and your risk. And we will talk about that today in some of the trades that we're going to go over. So, as I was saying, I day trade. That's what I like to do. So, what do I do? When I'm day trading, I'm taking a position in between the hours of 9:30 when the market opens, and I'm exiting the trade before 4 o'clock Eastern time. That's what I do. So I get in and I get out the same day. I'm not carrying positions overnight unless I'm doing an option, which we will talk about some of those, but then you have a fixed risk. Dan has a question here. Let me answer Dan's question quickly. Dan is saying, $1,000 profit with how much initial capital? Well, I'll tell you what your risk would have to be. Your capital will depend on the stock price of the stock. We're going to talk about last week's trades. Some of the stocks that were last week were $30-some. Some of the stocks I traded last week were $80-some. Some of the stocks I traded last week were $12 a share or thereabouts. So it's the thing where I trade a range of stocks. Could be $3 to $5 on the low end, could be up to $100 on the high end. I trade a different stock every day. So the cost price of the position, if that's what you're asking me with the capital, will vary depending on the price of the stock. As far as the amount of dollars that you risk to make $1,000 a day, you probably need to risk about $400 or $500 per trade. Now, the examples today were my risk of about $1,000 a trade. I give myself a cushion of about $1,000 or sometimes a little bit more in my day trades. But if you want to hit this mark of $1,000 a day, you don't need to risk $1,000 a trade, but you need to risk probably about 500. But as far as the money that you need in your account, it will depend on the leverage that you get from the broker that you trade and the cost price of the stock. For example, I'll just write this in here. I don't want to get too off track. But if you have 5,000 shares of a stock that's $10 per share, that would be $50,000 in buying power, not $50,000 in cash, because you get leverage from the broker, okay? So if you had a retail account, it's usually 4 to 1. So 4 to 1 leverage on your money. If you have a prop account, it's usually 10 to 1 leverage on your funds. So in that example, if you had a prop account, you need a minimum of $5,000 in cash to take a 5,000 share position in a $10 stock, and you would need more than that, I don't know, approximately like 12,000 or something in cash if you had a retail account. There's different types of trading accounts. Maybe Paul can talk about that when we're done if we have some time, okay? Yes, I do trade options, RS, and we will talk about some of those trades today too. Options are different, though, than stock equity positions because you don't need to have a set buying power. When I take a trade in something, I could take a trade in Google, okay? If Google is $7.50, or let's just say $7.75 per share, you don't need to worry about buying power in options. That's one of the nice things about doing options. So you can trade very expensive stocks that have very, very big moves, and it's only a set risk, dollar for dollar, which you could use a $500 risk. This is what we're talking about. And you don't have to worry about the buying power. And in that case, then you can open up an account to trade options with, $2,000 or $1,500 or wherever you can open up an account. Does that make sense? You don't need the buying power of the cost of the stock. Tell me if this doesn't make sense, but we can talk about this more at the end. Okay, what was I saying? So day trading is a way of chunking it out. You are producing income. You're not like Warren Buffett. You're not in the trade and then holding it for like the next 5 to 10 years so you can retire. You could do that with my strategy too, except for the fact that that's not what I'm doing. So if you want to do exactly what I'm doing, I'm day trading, except for the options, which I may hold out for a couple of days or a few weeks. But the idea of day trading is you're chunking it out to produce the income so you can make $5,000 a week, 20 grand a month so that you can do this for a career if that's what you want to do. Some people want to do it for a career, some people don't. But even if you only have 3 days a week to devote to trading or 2 days a week because you're busy, that's still extra money that you wouldn't have if you didn't do it, okay? That would be extra money that you'd have for savings for yourself, even if you don't want to do it as a career. And it's the idea of making your money and you get out and you just enjoy your day. David has a question. I lost what you said about 10. How many trades do you take on average daily? 1, 2, some days. Usually 1. So, that's, again, going back to the focus. Can you imagine if you only did 1 trade a day? If your losses are very limited and you're very focused on the trade, it either works or it doesn't. Every once in a blue moon, I'll like 2 things equally, but I still focus on 1. So it's very, very rare that I would do 2 trades at the very, very same day or time or within a few minutes. Most of them also set up in that same period that we're going to talk about in the morning. So I'm done early because I'm taking my trades between 9:30 and 10, right into the open. So you can do 2. It's up to you. This is a personal preference that I do 1, and to be honest with you, I'm really teaching people and talking to people, and I'm really encouraging people to really only do 1 because it helps you get the focus, especially if you're new to trading or if you're new to being successful. If you were losing for the last 5 years trading the market and all of a sudden you learn this and you're doing well, why not follow what I do? Don't try to reinvent the wheel. That's what I did at the beginning. I was trying to figure it all out. Just do exactly what I say, Make it easy for yourself. We were talking about this today in the room, and I was like, the easy money is the best. I was talking about in the trading room today, and I was like, what? I decided that the easy money is the best money. So easy money is you take the trade, you take it in the morning, you get out quickly when it moves, and you're up and you're done. That's easy money. When the market throws it in your lap in the first 30 minutes of the day, you take it. And if it doesn't throw it into your lap, then something might not be right. So why fight it? Why fight yourself? Why fight the stock? Why fight the market? So many people are fighting the market. I didn't see exactly the price of the market close today, but we completely 100% retraced the sell-off that we had today in the overall market in the SPY. And I looked at that. It was about like 30 minutes before the close or 10, 15 minutes before the close. I don't remember. I didn't see where we closed, but I was like, oh my Lanta. People shorted this market today and it 100% retraced itself. So you can't fight what's really going on. Not in the market, not in stocks. So you see it, you take it, and you just take the money out. And if it doesn't work, you stop. There's no reason to be doing all kinds of trades. It's less is more. That philosophy works to be successful as a day trader. It doesn't work to be successful in every industry out there, but this is something that people don't understand. In many, many jobs and careers, you're like, the harder I work, the harder I work, the harder I work, the more money I'm going to make. I know, I'm a hard worker too, but with trading, it's not like that. If you spend 9:30 to 4 o'clock every day sitting at your desk from Monday through Friday, I guarantee you, you're not going to make more money than you would just doing one trade in the morning with me and quitting when the trade is done. In fact, you'll probably lose. So you won't make more, and you'll probably end up negative. Okay? This is really important, people. I'm trying to help you here. So getting back to what I was saying, there's a huge upside potential to trade if you want to do it for a career because of the amount of money you can make. It's only about how much you risk that determines it. Oh, this is me. Paul put this picture here. This is me sitting at my desk. I don't have this outfit on right now, but I work from home. I work from home. It's very, very nice. I don't have to worry about commuting when the weather's bad or going on the subway or especially in the winter. You really can't beat it. And it's nice. And again, the nice thing is I'm done very quickly too, and I'm my own boss. I was my own boss before I started the business, and I'm my own boss now with the business too, and I can make my own schedule. I can set my own vacation. I can decide when I want to go away or take off, and the market's still going to be there when I come back. Right now is the holiday time. It's a time where the market is kind of going to be at a rest period for a few days, and then the Monday's the holiday. Just relax. It's good to take some time off now and again. And it's hard when you work for someone else. Sometimes you can't take off when you want to. And then you feel the constant pressure and the stress factor. So it is really nice to be your own boss. And it's one of the benefits. And if you can learn to do it, you will have your own financial freedom because you'll be in control of your life. You'll be in control of your life. You'll learn a skill that you can replicate and continue to do for the rest of your life. Whether you do it for 2 days a week, like I said, or 5 days a week is completely 100% up to you. It really is up to you what you do. So getting back to it, it's about having the focus. In any job, you have focus if you want to be successful. If you want to be a doctor, a nurse, anything, you've got to get the right education and you've got to focus on what you're doing. A lot of people want to be like a jack of all trades and learn a lot of different things that teach them something, but don't really teach them how to make money. So the reason you're doing this is to make money. It's the reason that anyone would do it. Obviously, you have things that you need to know, but a lot of broad-based knowledge really doesn't get you where you need to be in the market to be successful and make the money. So I'm extremely focused. Like I said, I do one strategy, one trade per day, and I even really focus on one direction, which we're going to talk about. All the ones in the trades today we're going to go over from last week were shorts, with the exception of the options. The options are longs. So I prefer to short for the day trades. And the reason is because stocks drop fast when they sell off, okay? So this is another level of focus. I prefer to only be in even one trade in one direction. I prefer to day trade to the downside unless I don't see any good shorts. I'm looking for a big move in the stock at the set time between 9:30 and 10, so I'm focused on the time, so I'm focused on the time. I'm focused on the stock. I'm focused in one direction. I'm focused on one strategy. I'm focused on whether I'm doing an option or a day trade. I'm focused on the target. I'm focused on only one pick. And I'm not even focused on the market, okay? So the market could be rallying, and I could be in a short. And in a short that's up, and the market could be rallying. And the market has been very challenging for people to read. And if you haven't known how to read it, we've been sideways for the last few days. If you don't know what to do with it, if you're needing the market for something for a move, you may be struggling. Okay, the strategy that I do has absolutely nothing to do with the market at all. All right. So you have to perfect what you're doing and you have confidence, and that's how you make the money. So someone's asking about the options. Here was BABA. I'm actually still in this. This was the first day I took it, though. I was up over $8,000. Would you believe that I did not get out? I actually did not get out. I am still in the trade, and I'm still in the trade, and it looks great. So you can look at the chart yourself tonight. I don't think Paul put the most recent chart in here, but I'm actually in this looking for a bigger move to make more money. And now I have 40 contracts. So originally at 25, and I added the position because the chart looks great. So we'll see where it goes. I'm in an option in BABA, but the first day, not only could I have made $1,000, the first day I could have made over $8,000. So as you see, you can make a lot of money trading. So it's just a factor of focusing on the right things. In fact, you could do this, and you could do like 2 of these a month and not do anything else, actually, because you can make a lot of money doing these things. You got to get the movers, though. You got to get the good picks. So anyways, here was the day that I was up a lot in that one. Actually, the next day I was up a little bit more. I was up 9,000 something. I didn't get out. So I went through the pullback, and now it's rallying back up. So I don't know where we closed today in this, but the chart looks great. So this is higher. So this was a call. So this was a long. Same strategy, the strategy I do, which we're going to talk about here in a little bit. But I look for stocks that gap. That's what I do. So the unique part of what I do in my gap method is that I have a rating system. It's a 26-point rating system that tells me BABA is a great long, or ANF is a good short. Okay, that was yesterday. So I have a system that tells me which gap, because every day there's tons of stocks that gap, and there's tons of stocks in the market, and the market gaps too, okay? So I'm looking for gaps, and then I'm looking for institutional money that's actually going to move the stock, okay? So I'm looking for institutional money moving the stock in one direction, and that's what I'm looking for, the gap. So you see the sell-off here in the crate. This was one from a little while ago. But the stock opened here. This is a 1-minute chart. It opened here, and it sold off, okay? It sold off hard, and all of this is happening when? Between 9:30 and 10. So I would get up in the morning, I'd look for what stocks are gapping down, and I see the CRE, and I use my checklist. It's a 26-point checklist to find which one to short. CRE was a short, okay? So here it was, and it fell, okay? So this was something, again, you have the focus. You don't need to do any more than this trade. If you get $1 move in something every day, that's what you're really looking for, $1 or more, that's enough money. That's way more than $1,000, okay? So you see, if you have 1,000 shares of something, it drops to 1 point, that's $1,000. If you have 2,000 shares of something, it drops 2 points, that's $2,000, okay? So again, institutional money, what is that? I call it big money, power money. It's what moves stocks. So it's money that moves stocks. A stock cannot move like this if institutions, hedge funds, banks aren't buying it. And they did. And they're continuing to buy it now again. So this kind of thing is what I'm predicting. So I took the trade here, and then it moved the next day. So you could have day traded this day too. So this is made with big money. So the philosophy, I'm just explaining to you just to teach you something here. The philosophy behind what I do is with the 26 points, I'm trying to use those points to predict where is the next money going to take it? What are they going to do with this thing? So this thing happens. Are they going to sell it and dump it? Or are they going to buy it? So the points predict what the institutions or the big money, the hedge funds, the big traders, the banks, what are they going to do with it? This thing here. And that's what my system does. And this is why I do well. So you can only make, thousands of dollars a day in something if it moves. I mean, if you're in something like these penny stocks, I just will never trade them. You have to take too many share sizes to get the move, and you have too much at risk, and they don't even move. So I trade stocks that move. And you've got to do this. But I do this every day, all right? My system involves predicting where stock goes by reading the gap that is made with institutional money. So I rate the gap in the morning. I do this all before 9:30. You can do it at 7:30, 8 a.m., 8:30. You do it before 9:30. I use my 26 points, which is what I created myself. This idea of gaps is not, many people trade gaps, but a lot of people don't understand them, can't predict them very well, or think that gaps fill themselves. BABA is a great example of this. People were short the stock this day, shorted as a swing trade, shorted as a day trade, shorted as a put and an option. And look what it did the day after. So, this kind of thing, gaps happen a lot, but many people don't have a way to figure it out as accurate as I do. And 26 points is a lot of things, but anything you could do to perfect it to get the most potential, for the highest potential that you can make money, you want to do. If I could come out with a 126-point rating system, I would do it. I got to be honest with you. Who knows? Someday maybe I will. Okay? But I want the accuracy, and that's why, and I get it, and that's why I don't need to do more than one trade a day. But it works for longer-term options trades and fast trades like the day trades. I do trade the 1-minute chart. I do trade the 1-minute chart. We're going to go over the trades in here from last week. They're all in the 1-minute chart. I like that time frame, and that's where you're getting the fast moves that happen. But you got to know how to do it because they do move very fast. Dennis is asking me, what is your win-loss rate? I'm going to say conservatively between 70 and 80%, Dennis. I will conservatively say that for the day trading. Although, to be honest with you, some months it seems like I can't get it wrong. I mean, every day last week I hit it right. Every day this week I called it right. Right now I can do no wrong right now. It's probably a good time to take a vacation. Probably why I'm taking a couple days off. I'm not making any mistakes at all right now. So don't quote me on that. I'm like 100% right now. But I mean, that's probably why I need to step back and take a break. But I'm going to be conservative and say between 70 and 80%. But I mean, everything I'm calling right now is just working. I'm like I don't even know. And the options, actually, I've called 7 option trades and 6 have worked and 1 has failed. So I don't know. Maybe it's something in the water here in Manhattan right now. I don't know. Maybe I'm taking an extra vitamin. But I will tell you, conservatively, between 70 and 80% over the course of a year. I don't know. Maybe Gene can answer. I saw Gene is here. He's a student. Oh, here's the options calls. Here's the options calls in this that I called. Dan is asking a Bob example, where is a stop loss placement? Bob I'm in is an option. So with the stop losses, there's no stop loss, meaning I take the risk. You will only risk in the trade what you're willing to lose. So you could have risked whatever you wanted. You could have risked $100. You could have risked $500. Whatever you risk, it's up to you, but you aren't going to lose. There is no stop. You have an expiration date. You got to get out of the trade before it expires. Okay? So you get out of the trade before it expires when you're up profit. There's several different targets, but there's no stop loss. The stop loss is really, I guess, in an option, the expiration date, because if you're not out of it by then you're going to lose. So you are responsible for taking the exit when you're in an option. You got to manage the trade, okay? But you got to manage any trade you take. Any trade you take is a day trade. Anything you do, you have to manage it, okay? Some of these trades, sometimes you get out of a trade and then it keeps going and you're in a short. You're like, but you're up, so you can't really complain. You're never going to get out of the low of the day in a short, and you're never going to get out of the high of the day in a long. And if you think that, then, you better recheck yourself. That's not realistic. That's not trading. You have one objective: to make money. That's it. Okay? One objective. That's it. You can't fault yourself if something drops $1 and you're short in it and you miss the last buck. And I couldn't have faulted myself if I'd gotten out of that BABA and made 8,200 and then it ran to the moon. Okay? So you have to decide. Not all gaps are created equal. So remember, I said I have a 26 points. So 20 is the benchmark. So sometimes you rate a gap and it reads 21. Sometimes you rate a gap and guess what? It reads 24. Well, what are you going to do? The 24-point rated gap is a lot better than the 21. And BABA is a great gap. I mean, that is just a spectacular. There's just absolutely nothing wrong with that chart. It's just the most perfect thing I've ever seen. The market fell today and BABA rallied. Okay? So you have to know that not every trade is created equal. Not every gap is created equal. That's where there's a 6-point cushion. All right? Okay, getting back to what I was saying here. So these are the calls I made. You can go back and look at these. These are the ones I did. And the only one that didn't work was Facebook, of the ones that I called. And so they were all profitable, 6 out of 7, which is obviously more than 80% as far as a win ratio. But that's just one thing that I do. So I actively day trade every day in the room, and then I do the options on the side. But how do you do it? You correctly read the directional bias of what the money's going to do with it, because you can't get something to move with a couple of people. It won't move $1. It won't move $10. It won't move $3. You want to get something to move, okay? So for those of you that don't know what a gap is, I'm just going to very, very basically tell you what a gap is. If you're new, and we're going to look at some charts then. A gap is a difference between one price and the next price from the close of business of one day in the market to the next day's open. That's what a gap is. And it is critical to find the right ones. Okay, you will very often have, all right, stocks that gap. Some gap little baby gaps, some gap big gaps. You just don't know. All of them are valid to rate. But understanding which are meaningful and which are not is the key to making money in the market. So it's like the market is one big ocean. You've got to kind of steer yourself through the waters here, because you get up in the morning, excuse me, and you may have 30 gaps. Well, they're not all good. They're not all good. They're not all playable. They're not all going to work. They're not all going to work in the direction of the gap, not by far. So it's about picking the good ones. And you could do everything that rates over 20, but like I said, if you're following me, you would focus on the one. Or you could do one option and you could do one day trade. But literally, this is a great example here. You're on a ship, you're sailing through the waters, and you got to steer yourself to where you're going. If you're going to an island, if you're just going out, but you got to still come back home into port, you've got to steer yourself through the waters of the market correctly. And there, it can be choppy. You know, the market can be choppy at times. And you still have to steer yourself. So what are you going to do? What are you going to rely on? One of the things we talked about this in the room too is I've been saying the market is faking people out. It's fake, 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 fake. It's faking people out that think it's lower, but it's not. It's just not. It's just not. And so it's a fake out. So when something looks like it's a fake out, that's why it's good to have a system. Because then you say, let's go back to the system. Let's go back to the focus. You got to go back to that. You say, oh, there it is. Now I know I'm fine. And you stay with it. So this is anything you do, an option trade, a day trade, whatever it is. And that's why having a system that is very, very, 26 things is a lot of things. Having a system that is detailed really helps you get conviction in it. You say, wait a minute, this thing looks good, and this thing looks good, and this thing looks good. Why am I even questioning myself? And you say, no, I go with the system. And then you do it. Okay, and that's how you know. So anyways, I teach a class. The class is called the Golden Gap Course, and you can learn my points in the class. I think someone asked earlier about the points. I'm not going over the points today. It's a 16-hour class that I teach on it, but the class is September 17th and 18th if you're interested. Someone had asked earlier. But it rates the gaps on the daily chart to give a high probability of directional bias for the entire day, a big move in the day, okay? Early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow-through and a good risk-reward potential. And someone earlier was saying about the 1 minute. And yeah, we're going to go over those trades. So let me just see here some questions. Oh, Gene put in the room here his 2 cents. Gene said, for what it's worth, I participated in her room, and although imprecise, she's very good. 70-80% wouldn't be unreasonable. In addition, many of her trades make multiples of what one risks. Oh, thank you, Gene. Thank you very much. Okay, let's go back to the BBY. Here we go. Okay, this was actually this was back from last week, and it was a gap up. So the stock closed here, gapped up, boom. There you have it. And then it rallied. Again, a lot of people would have read this and thought, well, maybe it was going to fill the gap or a short. But do you see? It wasn't a short. It was a long. And actually, this was a big, big, nice mover. So this is a 2-minute chart. I did this on the one. I'm not sure why Paul put this in here, but I trade in the 1-minute chart. But anyways, here's the pullback. Here's the entry in here, and then it rallied. And this one went past the target. So the target was 39, and it went a little bit past it. And I think this even continues for several days up. I'll have to go over that and see. But it really actually had a beautiful move. So you could have held this through even the 10 o'clock period. And the reason is because of this pullback. So this is the tail happening here. This is this. See? So you wouldn't know what to do unless you knew the rating, because this did sell off. Do you see this here? So if you're watching this sold off. So you might think it's a short. It actually broke the low twice, almost 3 times before it went. But if you shorted this, you lost. There wasn't any profit to the downside. The profit was here. So this is the profit. So this is, boom, all of the volume, all of the big money, all the power money buying it. So you would never have a stock that closes here at 32 something. And again, this is what a gap is. It closed to the night before at one price at 32 something and opened here the next day at 38 something. You would never have a stock that gaps up $6 overnight, holds and rallies another buck plus without big money buying it. This is some serious business, people. That's real money. That actually happened. So this is what I'm trying to predict. But I'm trying to predict it before it does it. Because if you don't predict it before it does it, how are you in the trade? By the time it's all the way up here, you're like, I missed it. No, you got to take it in here. So you're taking it in here, but you got to know, because this could have collapsed. So it could have collapsed, and it looked like it might. But I held the conviction, and the conviction is the rating system, the 26 points, the gap itself, the strategy. This is what we're talking about. The focus, the focus, the focus on knowing that I've got it right to call it along, to do it at all, that the stock would continue higher, that it would go, okay? This is very, very important. These are the things that are critical. So anyways, someone was asking earlier, if you take 2,500 shares, or if you had of the BBBY, and risked $1,000, you would have made $3,000. So if you wanted to just make $1,000 a day, like I said, $500 risk is fine. So you would have taken half the size, about $1,250. You can even take odd lots. You take 1,300 shares. Some brokers don't let you take odd lots. Then you would have made $1,500. Okay, so there's your $1,000 a day. More than that. Okay, but you could risk this if you're capable of doing it. You'll make more than that. Let's go over the EXPR. So the EXPR closed here, gapped down. Again, you rate the gap. This one was on the cheaper side. Someone was asking about buying power. This stock is only worth $12 something. So you rate the gap. It tells you it's a good short, okay? It tells you that it's a good short, and then you can short the stock. Then what happens? You watch it. You still are not in it until it sets up. You still got to get the trigger. So this is a 1-minute chart. Open, dropped, rallied back, boom, you can short it here. Dropped, rallied back, boom, you can short it here. Dropped, rallied back, boom, you could have shorted it in here. You could have done this like 10 times. Anyways, I only did this once, but it was a nice trade. And you see again the time period in here. All of this is happening between the 9:30 and 10. So if you had risked $1,500 on this, share size is 3,000. I only did this one little quickie. I didn't even do the entry up here. I didn't even hold it all the way down. I just went, boop. And we were talking about this earlier as far as the fast money. I just like quick moves. So I did a late one in this. And I got out quickly, and I still made $1,000. If you had gotten the whole shebang, you would have had to hold it to about 10:15-ish. You could have made more. But as I was saying earlier, in the day trade, they're like quick money. Well, I'm just saying what you could have done with it, RS. I only did this. All I did was this. I just went in and out. I'm giving you trades you could have taken if you want to do multiple trades or entries. In other words, if you don't get this, you can do this. If you don't get this, you can do this. If you want to do this and hold it all the way down, you can. If you want to do this and get out like me, then you just do what I do. I'm just showing you that the stock had multiple trades in it. You can do multiple trades in one stock if you want to, if it has a bigger target at hand. I don't really do that. Yeah, that's why here I'm showing you. The risk was 1,500. This is not a high risk to reward here because I got out early and I only did the one quick move, but I still made $1,000. You see? If I had taken it up here, risked $1,000 and held it down, it would have made way more. But you don't even need to get this huge move to make this money. That's the point I'm trying to make. Does everybody understand this? The point is, how do you make the money knowing that this stock is a short, knowing where to take it at all, and knowing where to get out into the momentum? So I'm taking the trade, and I'm immediately up in these trades when I take them. Where you get out is up to you. If you want to hold it to the target, great. If you want to get out where I do, great. Sometimes I get out really quick, and I don't want to hold it to the target. And this was an instance here where I didn't. Okay? but I was up as soon as I took it. The idea is you're up as soon as you take the trade, you get the direction right, and you know which stock to pick. Does this make sense? Let me know if it doesn't. This is where the focus lies. Knowing what to do, knowing where to take it. Christopher is saying you can never be perfect, but you can still make good money following your system. Oh, thank you. I think that this goes back to what I was just said a couple minutes ago. You will never get out at the high of the day in a long, and you will never get out at the low of the day in a short. So it's just one of these things where you have to decide. If you are having a good week, for example, and you could make $1,000 in 5 minutes, or you have to go somewhere for the day, and you're already up your goal for the week, and you don't want to suffer through a pullback because this did rally back. It didn't rally back and take you out, but it did rally back, okay? If you want to get out because you're doing well and you're up $1,000 in 5 minutes, then just get out. Otherwise, you see how the stock rallied. It still kept going. This does happen, but, you know, there's no guarantees here. There's no guarantees. There's no guarantees it's going to keep going because it came into the first number. In this case, it did. It did have more move in it. I think the low of the day was 11 something on this. But what are you going to do? You have to decide. The money management is on you if you don't want to take my exact trades, entries, and exits. If you want to do something different, then go with it and take every trade to the target. But I'll tell you right now, not every trade is going to go to the target. And there are multiple targets on it on one day. There's multiple targets on anything you do. Here was DG. Here's a good example, one that went way past the target, insanely past the target. I think I said $79 in this. $79 I said on this. Here was another one that went just crazy, okay? Actually discontinued. So you could have done this as a swing trade. You could have done an option in this. You could have done a put. I did not. But I said $79 on this. I never thought this would go like this on the day. But again, this is the power of institutional money in a gap. So what happened? It sold off. Stock closed here the night before up here at 91 whatever. Opened the next morning down here at 81 something. This got hammered. It's still getting hammered. Look at it. It's falling off a planet. So 1 minute chart. Open, dropped, rallied back, boom. You can short it. You could have done a lot of entries in this. Someone asked about that. You could do one or you could do several of them. But again, it's the same pick, the same stock, or you can hold it all the way down to the target, or you can just take the first move and quick it out. Again, I think in day trading, the fastest money is the easiest money to take, but I don't lower my stops. So you can lower your stops if you want to. Some people get into trades and lower the stops to break even. I personally don't do that, but you could. So if you took 2,000 shares of this, you could have made what? $2,100. Boom. This just fell off the planet, though. I mean, I did not get anywhere near down the low of the day in this move whatsoever. But it was a good trade. You could have gotten $1 out of it just to play it quick in the morning. But this one insane. I mean, this is, look at this. So again, we're talking about institutional money. What happened? They sold it. They just dumped the stock. Poof, it just went. How do you find the gap candidates? Very easy. If you have a platform, you have a live platform, it'll have in the actual platform a list of 20 stocks that are in the NASDAQ and the New York Stock Exchange that are gapping down and up every day. You can use that as your scanner. If you want to pay for a scanner, you can. I don't. You can go right into your live platform and you'll get 40 stocks in either direction for free. So I use that, and that gives you plenty of picks. If you really, really want to buy a scanner, you can. For a while, I did back at the beginning, but then I felt it was overlap. I just felt it was just too much of the same thing and a lot of overlap, and I decided then not to, I just canceled the scanner. I just didn't want to have it because I thought it was just too many things, and I ended up looking at the same things and I was paying for it. But I'm telling you, you could have a scanner if you feel like you need to. But that's where you find them. On your platform, top 20 list, you get 40 in both directions, okay? It's really not hard to find gaps. It's really not hard at all. So if you did just the 3 from last week, the BBY, EXPR, and DG, now this was a $1,000 risk or more. It wasn't 500, but just in these 3 trades, you could have made over $6 grand. So you see how you can really hit these marks. And this was just 3 trades in 3 days of trading, because that's all I traded last week. So I really think you have to decide how committed you are actually to making money in the market. I find that a lot of people are kind of wishy-washy about it. I mean, I talk to a lot of people on email and stuff, but if you're not committed, okay, to actually being successful, then you will not be. You just won't be. You won't be structured. You won't be focused. You won't want to take my class and pay the money for the class or learn from me or follow the instructions I give you in the room. You must be committed. The people that do the best with me, the people that do the absolute best are the ones that really want it badly. Like I said, they're disciplined and they're committed. They actually want to make the money and they actually want to make a lot of money, okay? So just very quickly here, I'll go over this. The share size that you need to make a living has to do with the number of shares you take. And it has to do with how much you're willing to risk because you can't afford to risk more than you're willing to risk because sometimes trades don't work, all right? You will have trades that occasionally don't work. But if you get $1 move in something, again, it's 1,000 profit with 1,000 shares. And if you would have 2,000 shares and somebody would only move 50 cents, you could still make $1,000. So it's up to you if you want to hold it down to a bigger move or get out the first sell-off if you're in a short or the first rally if you're in a long. But stocks that I trade move. They usually move $1 and sometimes more like we saw depending on the price point. So it's really just the idea of finding something that's good that you can get the sell-off. And sometimes things sell off $2, sometimes things sell off $3, sometimes things sell off in the price range I've found between 20 and 35 bucks can really sell off a lot for stocks that you think are not that expensive. You don't need to be trading stocks that are an $80 price range every day or Babel like 95 something or 97. You don't need to do that. You can make money in things at a cheaper price point, but you got to get it right. You have to get it right. So it's about becoming a professional, and it has to do with commitment. And the commitment says, I am committed to making money in the market. I'm going to stop messing around, and I'm going to stop taking it casually, I guess. You've got to be serious. And part of the seriousness of that is taking the time in the morning to prepare, going through the checklist, going through the rating, thinking consciously about the money you're risking, excuse me, using a stop. I always use limit order stops when I take a trade. So I put in a hard stop. If the trade doesn't work, I'm out, and I will only lose the money that hits me out in the stop. That is another important part of my system because you don't want to have unlimited risk. A lot of traders, day traders, don't use stops. They're afraid to put the stop in the wrong place. But if you don't put in a stop and the stock goes against you, guess what? You can lose. And you can lose more than you were prepared to lose. You think, well, I'll just take it out myself. No, you won't. The stock can flip around very quickly. So that's another thing that I teach people. And also to have conviction in using stops because I know where to put them. And you learn that in the class. Don't be afraid of using stops. It protects you. It's like the insurance, okay? So one strategy, and this is the point I'm trying to make all day here, is how you can be successful. And, lots of people fail because they're just not focused. But the reason these gaps go, whether they're ups or downs, is because institutional money and the price patterns is buying them or selling them. And you don't need to do anything else but my system no matter how you trade it because the institutional money gives the play. It gives the play on through that you need to get the moves in the stocks to go to get the profit so that you can make money. Whether you're risking $500 or $300 or $1,000, the stocks move. And that's what you need to get the play on through. And it's the institutions and funds that are moving them. There's someone just put in something about a gap down list. I never heard of that, but maybe that works there. Thank you, Dennis. So is this for you? I don't know. You have to decide. I appreciate you coming, but you have to decide, is this really what you want to do? Do you want to come learn from me? Do you think I can mentor you? Do you think I know what I'm talking about? Does anything that I say resonate with you? It's got to fit your time schedule to trade Eastern time between 9:30 and 10, okay? And I'm in the trades now quickly, like I said. If you are passionate about trading and you want to do it, you can come and learn from me. Like I said, the class is not till September. It's September 17th and 18th. And it's something that you got to know. Are you committed? But it's great to work from home. It's great to have unlimited income potential. And my system, it just works. It works. I've been trading now for 8 years. I've had the business now for 4 years. Oh, here's a nice testimonial from a student. This is from Philip. He did the, this was the Apple. He did the Apple option. Actually, this went to the dream target. He got out of this. I think this kept going. I think this actually even hit 109 something. I think it went up to 110. This was just crazy. And he did the Google as well. So this is almost 20 grand in actually 2 trades that happened within a less than a 1 month period, but there's just so many different ways you can trade gaps, and that's the point. That's the point. So if you're interested in learning my strategy, I teach a class. It's September 17th and 18th. The class tuition is $49.99. Retakes are free and it's online. So you can be anywhere in the world and take it. If you want to sign up ahead of time and start trading with me in the month of September, you can do that. My email is melissa@thestockswoosh.com, and I'm offering 20% off if you sign up by tomorrow. I know it's not a lot of time, but this is a huge savings. I don't normally do this. I'm trying to help people out. I know that people need help and they want to learn and they've got to have money to train. I'm going to offer this through tomorrow because I'm going away for the Labor Day holiday. If you want to train with me and you want to do the class, you can save $1,000. You'd have to decide and sign up, though, by tomorrow, September 1st. But I will be around tomorrow if you want to do it. So it'll only be $39.99. The class is normally $49.99. And here's some testimonials you can read through here that people have read stuff. Let me just see if there's any questions. I don't know how much time we have, Paul. If you want to talk about the buying power, if you want to talk, and I'll just leave the slides up. I don't know how much time we have left here, if there's time to do that. If you want to talk about that and answer. Someone had a question about that earlier. Does anyone have any questions specifically for me besides the ones so far? Oh, Paul doesn't have his mic set up. Okay. Well, the gist of what someone was asking about earlier is it depends where you open your trading account, okay? Your trading account, the broker where you trade, they will tell you what your buying power leverage is going to be and how much money that you have to actually put up. So I'm not a broker. You have to open up your own trading account, but there's many, many, many out there. Millions, billions. The trading room is $300 per month, but you can only be a Golden Gap student to join the room. So if you would like a free trial for the room, you can do that. After I'm back from vacation, you can email me if you'd like a trial. You would miss out on the special that I'm only offering through tomorrow, but you can certainly do a trial at any point and just sign up and pay the regular price for the class in September. But you must be a student to join the room. The room is only students because I teach, I talk, and to be honest with you, you got to know what you're doing. And this is what I was saying, you got to be serious. You have to be serious about doing this. To pay $5,000 for the class and pay $300 for the room and be in it and take my calls and be there every morning between 9:30 and 10, you got to say, I really want to do this thing. But it's worth it because you can make so much money. And I'm not trading all day. I mean, there's days in the last 2 weeks, I think I've closed out the room at 10:15. I run the room and keep it open until 11 o'clock if we need to, but I mean, some of these trades have just been going so quick. Every once in a while, you do get something like DG that will fall all day. And it's up to you if you want to hold it, but I honestly think it never pays to trade into the afternoon because what typically happens is traders give money back in the afternoon. They trade in the morning, and then they trade in the afternoon to give money back. And if you start the day and the trade doesn't work that you do, then you're digging yourself a hole. So you can join the live trading room. It's $300 a month after the class. And let me think if there was anything else. I guess that's it. It's an exciting time to trade. A lot of volatility in the market. I mean, today is a great example. Very volatile to have the market gap down, have a hard time breaking, sell off, and retrace itself into the close. And tomorrow we probably are neutral or gap up and follow through higher. I mean, this volatility in this market is prime to make money. But you got to know what to do. If you don't know what to do, you're losing. But that's the case in anything. It's a case in any kind of market. But it is prime time right now to look for the volatile moves and stuff to the upside or the downside because people are losing money because they don't know what to do and they don't understand what the market's doing. The market is higher. I will tell you that much. And that's worth your time to come here tonight. So hold good longs if you have strong stocks and the market's higher too. You could do any one of a million options in the spiders right now because the market's going to hit over the high again. It's just going to do it. That 220 number is just lingering up there in outer space, waiting to blow over. All right. Thanks for coming, everyone. Thanks for having me, Adrian. Again, if you'd like more information, you can email me at melissa@thestockswoosh.com. And if you want to sign up for the class, like I said, you can sign up tomorrow if you are interested, you can email me questions tonight or tomorrow. If you want to talk to me on the phone, I'll be around tomorrow before the holiday, and you can save $1,000 and then trade in September. Thanks, everyone. Thank you, Paul. Have a good night, everyone. Be safe. Have a good holiday. Happy Labor Day. Thank you.